All right, welcome everybody. Sit down. It is time to begin. So, welcome. I'm just about 1 minute early. Make sure that we're all we paying attention just yet. Yeah, possibly. It's going to be a pretty intense session. So, focus, focus, people. Let me break off this other chat room here so I can read this off to the side. I got enough monitors today. We're gonna we're gonna be just fine here. So welcome everybody. Hey, chat in. Let me know you guys hear me all right. By the way, I always say that because we're broadcasting into a lot of different rooms right now. Hmm. We are live. We are live. Um, Making sure we're all good. By the way, I'm also going to tell you guys this in a minute. Put your phone on mute so that you don't so that you don't get distracted by it. It's probably a good idea. Welcome. All right, where's everybody joining us from today? Let's start with that, and then we'll kind of hop into this. I'm just giving everybody a moment to get kind of situated. As I said, we are broadcasting this live today into a couple of different pieces of technology. I think we're into YouTube and WisePub, into the Theo Trade Room. There was something that I wanted to talk about. So, last week I talked about earnings related trades. This week we're going to be talking about Pendulum, and Pendulum is something I've worked on for quite some time. In fact, I'll explain that a little bit during today's session. So, all right. So yeah, again, where is everybody joining us from? Cool. So Chicago, Germany, Chicago. I heard Chicago had some really rough weather in the last 24 hours. One of our guys, Todd Sweet, was trying to get back from New Hampshire to Chicago, and I believe he slept in an airport in New Hampshire. At least it's not sleeping in Chicago's airport. I have done that more times than I care to remember. So fantastic. um, yeah, a couple of people in here actually from Midwest, Chicago, awesome. Texas. So I'm broadcasting today. I'm still up in the mountains. I'm in Payson, Arizona. For those of you that have no idea what a Payson, Arizona is, nobody knows what Payson is. It's a town of about 15,000 people. It's a little mountain town. And again, we're about 90 minutes outside of like Phoenix. But you're just over 5,000 feet, so it's cool up here. You just have to deal with elk and the occasional bear. There's a bear running around somewhere in the neighborhood right now. We keep getting like reports of it in like text messages. It's one of the things I was just looking at. There's a bear in the neighborhood. I'm incredibly excited about that. I'm actually going to go drive around. Yes, I am that person. I'm going to go drive around and track me down a bear later in the day. I want to see that thing. Let's talk about markets. So in most of today's session, I'm going to be either here in Think or Swim or over here in Tasty. I'm going to be toggling back and forth. There's a couple of PowerPoints that I have situated for you today, but in discussing Pendulum, there's again, I'm actually going to do this a little bit more old school style, which I think you guys will kind of appreciate. So sit down and let's get into it here. Um, excuse me. One of the first things, and one of the reasons I wanted to host this session, like right here, right now, I will absolutely share some trade ideas with you today. Okay, there's just no question. I'm going to share some trade ideas with you today. There is, before I get into this risk disclosure, we're not financial advisors nor a broker dealer. Okay, I got that. I'm going to share some trade ideas with you guys, though. There is change in this marketplace, some fairly wild rotations. Look, before I get into any detail about what the trade opportunity is right now, I just want to show you something in the last just few trading sessions here. It's the middle of July, which is, people like, it's summer trade. I just want to show you something. What drives order flow in this business is right here in the ES. Now, there's no question stocks like NVIDIA, your Meta and your Tesla, okay, and Apple and, Microsoft and Amazon have played a critical role in the rally. There's no question about that. But in the end, the S&Ps, okay, And those S&P futures, they're used for hedging by professional trade, and they drive the order flow. So one thing I want to show you that, when I say change is in the air, um, there was pretty minimal volume. Obviously, some holiday trading here, like this was a half a trading session, whatever. Volume took off. It is rocking out there to do 1.6, okay, million ES contracts. You guys can look back at a lot of summer trade in a lot of different years. You're not going to see that kind of action. Okay. And you'll see some, but Don, there was big action right here. That's a roll. That doesn't even count. All right. This is rather intensive trade for the summer. So some change is in play. Some of the rotations that were working before, like, we were rotating and no one has wanted to touch the financials since basically, I don't know, you got to go back to February. Since February, these financials, okay, have been in an incredibly tight range. Just broke out to the upside here. The rotations are, and I was saying this on the weekend update, things have become very, very manic, very manic. And I further picked up on huge, unusual options activity here in NVIDIA. NVIDIA is trading gargantuan amounts of puts at the ask or above. Now, just time out, okay? When I mention this, it doesn't. This is not meant to bear up. I'm telling you, though, there is change in this marketplace, okay, and we're going to have some rather explosive moves. That's why we're talking about pendulum today. Right. What this basically means, when I look at NVIDIA and I go, oh, look at all the puts that are trading. Okay. The puts that are trading in here, it's heavy on the ask or above. And what that basically means, you get a market of $3 at 310, right? And this is the bid and this is the ask. Now think about that market. What it means, traded at the ask or above, okay? It's trade coming in and doing what they call sweeping. And they go, I'll take it. I'll take it. I'll take it. They'll take everything they can at 310, and then they move the price to 320. It's like everything they can at 320, and they move the price to 330. They take everything they can at 330. It's like walking in again to like a car dealership, and you're like, one in blue, one in red, one in silver. I'll take it. I'll take it. I'll take it. You don't even negotiate. You just come in at the ask or above. They're sweeping markets inside of NVIDIA, okay? And it's causing, again, really wild, very, very manic moves. And this is stuff that we're really starting to pick up on. Lo and behold, there could not be a better time to discuss. I mean, today is just perfect to discuss the pendulum, which is exactly what I'm getting into right now. So I'll start from the beginning. Pendulum Profits. My name is Don Kaufman. Welcome, everybody. I did that about the markets for a couple of minutes because we're going to go off the cuff a little bit here. I'm going to build this trade a little bit on the fly. Risk disclosure: we're not financial advisors, nor a broker dealer. Don't feed the monkeys. Housekeeping. Look, this is actually important. I am going to not just theorize a trade today. I'm going to give you a trade idea. You want to trade with me? You trade with me. That's up to you. Okay. As I said, I'm not a broker dealer anymore. I spent 15 years in the business on the Thinkorswim and TD Ameritrade side, but I am going to trade a little bit today. I like the opportunity that's out there. So when I say focus, I mean it. Like I was literally, I'm not joking when I'm saying I put my phone like on silent mode over here. Get rid of your phone, get rid of Facebook. Okay. Stop looking at Twitter. Oh, it's X now. I don't know if you guys saw, but they just announced the highest volume ever on X. And every day is sequentially higher. Look, you took time to be here. Focus on being here. So here's about a bit about me. Again, because I'm doing this because some of you maybe have never tuned in. You don't even know what a Don Kaufman even is. Okay. I grew up around trade. I've been in this business my entire life. I didn't go to school to, for business or be a trader. I went to school for molecular genetics, but I grew up around it. I had family that were market makers all the way back into, well, before I was born in the 1970s. So I grew up around trade. I went to Chicago in the late 90s, 3 weeks out of college. I was invited shortly thereafter into a startup called Thinkorswim. I was in the executive team of Thinkorswim. We took the company public in 2007. People always ask, how'd you do in that? I mean, good. It was a $600 million deal, and I had a decent percentage on that. I had a much better deal with TD Ameritrade. TD Ameritrade bought us in 2009. I signed a 5-year lockup clause. I exited TD Ameritrade 2015, and then we launched TheoTrade. What we actually did is we took this core team that was a Thinkorswim, a core team that we had together for the better part of about 10 years. We took them when we built TheoTrade. So a lot of the names that you see here at TheoTrade, whether it's myself or Brandon Chapman, I knew Corey Rosenblum back then, Blake Young. Of course, a lot of people know Jeff Bierman. Jeff Bierman, for those of you that don't know him, if you've ever been on Thinkorswim charts, okay, there's a debt that you owe to Jeff Bierman because he built most of the studies of Thinkorswim charts. A lot of people don't know that. But the most imperative thing that I always discuss with people is we got to see everything that you did for the better part of 15 years, and we had the largest option order flow in the entire industry at that point. And what you're going to learn here comes from watching retail traders and other people's mistakes and the knowledge of what works best for retail traders. So I still do some TV appearances. This is actually the cover of Investors Business Daily. This goes back to 2022, a killer year in 2022 and some of the volatility. Next in the docket, look, okay, Inner Circle starts July 18th. I'm throwing this out here. Some people know what Inner Circle is, some people don't, okay? Inner Circle is a 24-week mastermind, okay? What I am doing today is I am literally giving you one of the excerpts specifically, okay, from the 24-week Inner Circle. 24-week Inner Circle, they are 24 90-minute sessions. All of them are archived. It's 100% me. It's live. By the way, it's not recorded or anything. We do it live, then we archive it. It's all curated with absolute cutting edge trade ideas. Today's session, okay, is literally giving you, okay, one of those. We had no intention, if you guys realize, and we shot out a ton of emails the last minute, we had no intention of doing this. But I was like freaking out over the weekend. I'm like, this is the trade that we want to do. I could start the Inner Circle with it on July 18th, but we're going to do this right now. We're going to do it right now. We're going to talk in depth about Pendulum. So Inner Circle is something I kick off this Thursday. The 24 sessions, this is the very last time that I will do it. It is very time intensive. Obviously, it's 90 minutes for 24 weeks in a row. Okay. We give you priority email and private email support, which is 3-4 hours out of a day. So this is it for Inner Circle. The next session begins July 18th. It's theotrade.com/IC. Now, as I said, I'm just jumping into it right off the bat over here, and I'm going to give you some trade ideas. Some of the trades you may or may not be familiar with. And this is going to be kind of a combination, okay, idea. So as I move into the pendulum trade, okay, I was talking for a few minutes about markets. Look, doesn't matter what you think about markets right now, right? Doesn't matter what you think. Pendulum may really fit what we're looking at for the marketplace. I mean, I think that we could argue at this point, we could be in a period of, you can talk about election turmoil, although the probabilities there, okay, are drastically shifted now. I think I saw over 83% probability right now on the election already. I think that some of the turmoil is coming between now and then. Nevertheless, okay, we have been in a highly, highly suppressed volatility climate for a substantial period of time. Does that mean volatility has to explode? Unequivocally not, okay? But the opportunity right now, as you're about to see, is going to be an interesting one. And I'm going to tell you guys right now. So I'm going to jump in here and I'm going to talk initially about pendulum. Okay. What pendulum is. And I'm just going to script it here. Okay. And then, okay, no joke. I'm just going to take you into the live marketplace. We're going to build some trades. I hope that's okay with everybody. Right. So we're I love that comment. Okay. I do everything. I like doing it live. So, and by the way, the marketplace today, when I'm talking about like marketplace is the only descriptive word I can use. Is it volatile? Well, no, we're in a 13 VIX. Is it this, that? The marketplace right now, the only term to use is sketchy. Okay. It is on the edge. I mean, this is a market, and I'm serious today. S&Ps could explode up 50. They could be down 100. Okay. We are like right on like this little teeter totter. And it's funny because, you know, it's like right on the knife's edge in this marketplace where we could snap. And we actually saw it yesterday. Okay. One of the reasons, again, I just keep thinking about it. I'm like, I got to get these trades out. Like there's something I got to get out right now. That was the last couple of minutes to trade yesterday. There's no Fed speak. There was nothing. Okay. It's just heavy. I mean, look, out of nowhere in a 12 or 13 volatility climate, we traded 95, okay, to 65. That's a 30 S&P handle move in a 13 VIX in about 15 minutes and then bounced back from it. People, that is not normal. That is not healthy. And we're seeing a lot of that, again, very sketchy, very manic trade again today. So let's get down to business. Okay. The pendulum trade. As I said to you, I'm going to go very old school in how I do this, right? I like to use notes. And when I do the inner circle, I use notes like this. You know, slides are all well and good. And I'm serious about that. Oh, slides have their place. Okay. But notes like this, all right, are much better because we're going to go into the live market conditions over here. So pendulum. This is going to be a two-prong approach to create a pendulum. Okay. And the pendulum trade, okay, if you think about a pendulum, it's literally, all right, swinging back and forth. You're seeing some of that activity in the marketplace. What I'm going to do, and I'm just going to go again, no holds barred on you. I'm going to give you what these 6 items mean right now. And then we're actually going to go through and systematically create the trade, okay, off of these 6 kind of core themes in here. It's a two-prong approach. There's going to be upside potential, okay? And there's also going to be a downside trade. So the reason I actually brought this distribution curve into play, and by the way, I love to explain markets using a distribution curve. What a distribution curve, okay, means. I mean, for you, it might not mean anything, but let's look at here, distribution curve, right? And call this the SPY, right? So it's a SPY. What is the SPY? Everybody here familiar with SPY, right? I know we got some newbies. Newbies. Do we have newbies in here? Okay, because if you got newbies, I want to know. Everybody knows the spider. I mean, it's like pretty much the most prolific product out there. Spider's trading of what, 560, 563, it's fine, right? And I call it the most prolific product. One of the things I kind of want you to keep in mind, I don't really care what you trade. People are bringing up like different stocks and so forth. If you said Don trade spiders for the rest of your life, I'd be like, yeah, I'm down with that. You know, you trade VIX for the rest of your life. Oh, I like it. Okay. In this case, I'm going to use the spiders. This is the most prolific product, does pretty much the most volume. I mean, 15 million shares is not that heavy, but 5 million option contracts. Okay. Put on your big boy pants. So we're going to use the spiders. Okay. Just to kind of put the logic to you. And the spiders are trading right at, we'll call this 560 bucks. So SPYs are trading at 560. Okay. Anybody. By the way, somebody said it looks like a distribution curve. It is. So if the spiders are at 560, where can they go? Could they go up to 570? Yes. Could they go down to 550? Yes. Could they go all the way up here? Let's get crazy. They go 580. Okay. We can go all the way to 590. And obviously, 540 and so on and so forth. Right. And 530. All I wanted to show you is, okay, it's just a distribution. Like again, I want to extract for a second what you think about this marketplace, because in this trade, it is not going to matter because the pendulum literally, all right, is just flying back and forth. The trade is literally going to have risk graph that's going to be boom, risk graph that's going to be boom on both sides of it. There'll be a little bit of a dead spot to the upside, no dead spot to the downside. Okay. I'm going to show you the trade. And again, when I start bringing this up, you're like, all right, hyperventilating already. Okay. So when I say there's a dead spot, if the market explodes higher, you're going to be wildly profitable. If the market takes off just a little bit lower, the trade is profitable, period. There's no if, and, or but about it. So if the market heads down, it's going to be profitable. Okay. There are opportunities to do trades like this that are like the market right now. Well, screw it. We got the market on here. Let's just do this. Let's see what you guys can actually take today, right? Before anybody's head pops open like a cantaloupe. There are certain conditions that would exist in a marketplace that need to be prevalent for pendulum to really be just like it's low hanging fruit right now. It's just absolutely perfect, okay, for the pendulum. And there was a trade that I used to do years ago, okay, and I mean just knocked it out of the park. And that trade was actually called a risk twist, okay, or what we called infinity spreads, which was also a wild two-sided trade. This, okay, is even more effective. And it took years. By the way, in the trade I'm actually referencing, we were wildly profitable all the way back. I mean, the first time I ever really started using it was 2016, okay, during the election in 2016. Before that, it actually made money through Brexit, every major event. The trade we're looking at right now is technically an event-seeking trade, okay, but it's just looking for substantial movement in markets. But what makes it so incredibly viable right now? And this is where I'm going to drop you to the bottom of the screen. And some people are familiar with this and some people are not. The trade is super viable because of what we term skew. The skew looks like all weird over here. Look, I'm just going to bring it to like a 15 year. Okay. What in this chart, which is like very like people like that looks like gibberish. Okay. What skew is right now. And again, I'm going to explain it in just a second. It's high. It's not the highest it's ever been, but it's really high. Okay. At the same time that skew, okay, is high, okay, vol, which is volatility, vol, which equals, let's call VIX, is incredibly low. Now, that just completely like watered down and simplified the environmental conditions for this. Skew is high. You're like, that's good because I don't even know what skew is. Skew, which you're going to see momentarily, okay, is like a distortion in options pricing, right? Ooh, I'm distorted. There's always skew. There's always skew in everything you trade. There's skew. Okay. If you looked right now at the S&P 500, and this is such a weird thing to ask right now, but if you look at the S&P 500, where is the biggest risk in the S&P 500 right now? Let's see what people say. I'm kind of curious about this. Okay. Anybody? Where's the biggest risk right now in the S&P 500? Anybody? I like it. Somebody actually said up. Okay. It's a two-sided market in here. This is awesome. Uh, I don't mean sectors. I just mean up or down. I mean, up or down. So this is exactly what prefaces this discussion. There's a lot of people that are like, it is, people call it melting to the upside. It is like a crash to the upside right now. But you all have to be, privy to the idea that eventually this thing's going to come down. And I'm going to be very forthright and say, okay, I'm not going to take the bait and be like, we're crashing. This trade is bearish. This trade is also wildly bullish. Okay. But the risk right now, according to Skew, not according to Don. Okay. Don't take Don out of the equation. The risk, according to Skew, is clearly and decisively to the downside. And what Skew measures, and again, I don't want to geek out on anybody, right? I just want you to understand that the trade is built around this. What Skew measures is over here are puts. This is put volatility. Let's say put volatility is like 14%. And we have call volatility over here. And call volatility, right? These are your calls. Call volatility is 11%. The distortion between those two is the measurement of skew. Skew is high. Skew is high. What does a high skew imply? There's a lot of people buying puts because that's what causes it. Skew, when I say it's like a little bit of a distortion, skew is looking at like supply and demand. Okay. There's not a lot of people that are like, oh, I need a call. I need a call. In the spiders, though, they're buying puts. They're buying puts kind of like they're going out of style. They're buying puts and then they're selling calls to finance some of those puts. And it's further kind of distorting things. Skew, though, is really, really high. But at the same time, the overall volatility in markets, okay, is really, really low. This is a 15-year of VIX. 15-year VIX. And VIX right now is like lying on the basement floor, draw a chalk line around it at this point. Okay. Interestingly enough, though, skew skew is higher, but the volatility, which is lying dead on the floor, volatility kind of picked its head up in just the last couple of days. That's why I said, like, this is just absolute, okay, perfect time. Okay. It is like a meatball sitting out there, okay, that you want to grab to be able to discuss this trade. So I'm giving you a little bit of background, okay, on this pendulum idea. So the pendulum is going to be a two-prong approach. There's upside potential in this marketplace. That upside potential, you could say it's in the SPY or QQQ could be viable. But I want you to look at something right now. And again, everything that we do here, inner circle, it has to be put in context. This context, I don't care what you read anything. Look, right now, the NASDAQ right now has actually, and ironically, cooled off. It's not down dramatically. It's still ridiculously high. This thing could come spurting back to life. Okay. But all of a sudden, it's the spiders that have gotten interesting. The spiders are ripping to the upside because people are starting to rotate into areas like buy financials. Okay. Nobody even thought about buying like energy until a couple of days ago. It's crazy. Like, look at stuff, even like Starbucks. Nobody's bought this thing in months. Okay. They got to buy it all of a sudden. I need Starbucks. There is, again, change afoot in this marketplace. So let's start to kind of build this two-prong approach. There's going to be upside potential. For me, that upside potential exists in SPY. Okay. To take advantage of that, I'm going to build what is called a call ratio back spread. Back spread. How many people here are familiar with a back spread? Anybody? So as I said, the pendulum is a two-part trade. But I'm curious if you guys are familiar with back spreads or not. Back spreads can have some risk, and we're going to actually look at that. So the back spread, if this is SPY, okay. Oh, don't. Wrong color. If this is SPY, and SPY is sitting at 560, okay, we're going to take an upside shot in a back spread. Back spread. I'm going to help you build a back spread. I'm going to build a very effective back spread. Should be nice. So we're going to go out and we're going to build a back spread. And we're going to do the trade, okay, for credit. let's say that we put the trade on for $1 credit. Great. There's still some risk in the trade. I'll cover the risks in a moment. Then we're going to take the $1 credit and we're going to buy us a wild downside shot. Okay. The downside shot is going to be in a product that everybody knows, everybody loves. Okay. It's VIX. So one of the trades is going to be in SPY, the other trade is going to be in VIX. Now, you could be listening to this and say, no, the market's going to keep going up. Okay, that's fine. Just do the spider trade. You could say, no, market's going down. Okay, that's fine. Do just the trade in the VIX. But the combination of the trade, okay, the combination of the trade isn't going to cost you anything up front. There's going to be some margin held, but it's not going to cost you anything up front because the VIX trade, let's say the VIX trade costs $1. These two are actually going to cancel one another out. Okay. Pendulum. Very cool idea. Now, the idea is pretty straightforward. Like people are looking at this like, I can figure this out. Yeah, I don't think you can figure out the strikes. That's the whole key to the trade in here. And by the way, I am like, I'm not just, teasing for the trade and be like, and sign up for inner circle. I'm giving you like a full excerpt of like what an inner circle session would look like unequivocally. Like I want you to feel like you're sitting in an inner circle session today. The upside potential I want to place in the spiders, because in my opinion at this point, and it is my opinion, okay, and you can take, my trade and you can, mush it, make it your own and kind of, it's a little bit malleable because this is absolutely on the like bleeding edge of what you can do as a retail client in this market. And that's what's cool about what we try to do here at Theo Trade is I try to take you right to that edge, okay, of what retail can do. When I say retail, it's, this is a professional level trade. I'm not watering it down, but it's the simplicity of this professional level trade is just, it's beautiful. As I said, it's like a meatball hanging out there right now because the conditions couldn't be better. So I'm going to build a call ratio back spread. Okay. And I'm going to let you look at the call ratio back spread. Then we're going to go actually build the other side of the trade with it. When I say a call ratio back spread, I want to use spiders in this. Okay. Spiders have basically been straight up. There's no reason, okay, to think that the spiders are not necessarily just going to continue their march and their climb higher. There's just not. And we can go into the Analyze tab. We'll look at this stuff over here, most feared tab in the Thinkorswim platform, the analytics. Okay. I'll tell you what, Schwab is done a little damage to this platform recently. They're, as I call it, chucking it up. I said chuck, right? they're we've been using Tasty extensively more. But for argument's sake over here, because I wanted to use the Analyze tab, we're going to go out to the September 20th expiration. So I'm 66 days out. Now, in today's session, I don't have enough time to get into the detail of like, why are we using this expiration? Because again, that would take, long argument in that time, a considerable period of time. Anyway, I'm going to build this trade kind of off the cuff. I'm actually going to sell a near money option. I'm going to be selling something like the 564s. Okay. And then I'm going to run a little further out of the money over here. Let's go ahead. Let's get crazy. And let's go and to these. I might play around with some of the strikes. Okay. My first shot is not always going to be my best, but $1.66 credit. Oh, let's play around with this one. 230 credit. No. Okay. $1.03 credit. Oh, all right. Okay. So anyway, I'm playing around with some of the strikes in here. This is a call ratio back spread. And I just want to bring it up. I'm going to take it and I'm going to analyze it. And for those of you, if you've never been in the analytics tab, look, calm down. It's all going to be okay. It's all going to be okay. First of all, just to look at that thing inverted on me there out of nowhere. So one of the first things I want you to know is this being where I'm drawing, okay, this lovely yellow line, that is where the market presently is, okay? If the market tanks, okay, this is tankage, tanks, you keep $1 credit, right? You keep $1 credit, okay? That's if the market tanks. This okay, is what we term the valley, okay, of death, okay, the VOD, valley of death. Does it sound horrible? I know, I like it. I like saying valley of death. There is nowhere that you can go without crossing through the valley of death first. In all seriousness, the valley of death. There's profitability almost immediately to the upside in this trade. If, and only if you held this trade to expiration, could you get caught in the valley of death. But I have a news flash for you. You will not hold this trade anywhere near expiration. The trade, okay, is for 60 days plus. Okay, 60 days plus. Why do you have to hold it for 60 days? Why got to be like that? You can get out. There's still 20 days remaining. Okay, 20 days remaining, the risk in here would be negligible. I'm showing you like that how to take a back spread. Okay, back spreads are cool because back spreads will work immediately. They will work. Everybody's like worried about this valley of death. I always describe the valley of death. It's the Andy Dufresne of trades. If you have no idea what that means, it goes from Shawshank Redemption. He claws through a couple of 100 yards of crap to come out smelling clean on the other side. It's the Andy Dufresne of trades, except I'm actually going to take away the whole crap part. That is not really going to exist in your trade because we're going to be exiting the trade well before expiration. You get an explosive and instantaneous move to the upside. Okay. You can actually make money at 570, 580, 590. We are not going to hold this thing because what happens to this trade, you want to know what happens over time. Just come over here and go expiration. Okay. Be watching. You can go +4 expiration, but the easiest way to do this is what they call day stepping. Okay. Day step. You go, look, nobody, this is not on the test. I promise you. This is not on the test. Day stepping shows you all the way out until, okay, August 13th. August 13th, which is basically just about a month from now. Everything you see on here is basically profitable. You go, but that's not far enough in time. Good. Let's put some more steps in between. Okay. Here's all the way to August 25th. All right. There's negligible risk at that particular point in time in here. Almost every move higher is what is profitable. And I wanted to show you that. Back spreads, the risk in back spreads, by the way, the deepest risk you could possibly take in this trade, looking at this risk graph, the deepest risk you could trade is $201. Oh, wait, I found 205 right there, 209. That's it. That's the deepest risk you take. $200 of risk if you exited the trade, okay, by late August in here. Now, I can get into the details, but I want to actually show you, okay, the ability of the pendulum trade. And again, this is only a 1x2, right? Is this a lot of contract size? No, this is the absolute minimum. This is a 1x2, okay? Explosive upside potential. Can the market get to 590? Of course it can. Even if the market gets to 590, you realize you're looking at anywhere from $500 to $1,000 of profitability. Make it a little easier. Okay. That's a little easier to look at. If we get up to the 600 level, okay, you're making, okay, anywhere from 1,300 on up to almost $2,000. Okay, that's 600 in the spiders. Where the spiders right now, okay, I'm trading 563. That's not a far cry in the next 30 some odd days, 30 to 40 days. Any higher than that, and it's explosive to the upside. A back spread in most conditions, you would think like, well, in this condition, it is absolutely the perfect trade because you can sit here and you can argue to your blue in the face of what you think is going to occur in that marketplace. Where's the risk? Look, not according to me, but according to the skew, the risk is clearly to the downside. Okay. We've already seen explosive moves to the upside. Why not see continuation over here? If there's continuation to the upside, you're going to be golden. Okay. You're going to be golden. And to kind of like ice this cake, you've taken in $1 credit. Are we okay so far? All right. Because now we don't have to really worry so much about the valley of death. Again, good. Bear with me here for a second. Bear with me. All right, so the dollar credit. Where the pendulum actually really comes into play is when you start looking at not just one side of this. So let me go ahead and bring up my notes again. All right, everybody good? Everybody okay with that? All right. I was looking at Kat and Vicky said, why does Tasty have a $7 credit? You probably didn't put in the right ratio. So if you're looking at a $7 credit, it is definitely you're selling one and buying two. Okay, selling one and buying two. By the way, earlier I was talking about skew. And in talking about skew, you can find something really, really interesting about this. So I'm selling the 560s, 565s in this case, right? So if I can get the whole thing in here. Oh, this is going to be perfect. Perfect. Okay, here's the 565s. We're selling a almost 13% implied volatility, right? In this case, it's really 12 and a half, but we're selling basically a 13 vol. Then we come out to the 579s, right? Come out to the 579s and we're buying two of these. And I'm just going to round it and buy these at like 11 IV. So what are we doing? We're selling a high implied volatility and buying two of the lower implied volatility. So skew is just ever so slightly tilted in our favor. By the way, people don't think that that makes a difference. It does. Makes a critical difference in here. Now, okay, this is part of the trade. Okay, we're going to leave this one alone. I'm actually going to leave it dropped inside of the Analyze tab. Okay, next, let me come over here and go single symbol. Next, we're going to cruise on from this trade. The next aspect of this trade, okay, is from the call ratio back spread. Well, we need downside opportunity. On the pendulum, okay, we're literally saying that the marketplace, okay, could rock very, very rapidly, okay, in either direction. And the conditions, the reason I keep saying the conditions are so good right now is because the skew is heavily elevated. The volatility is down, but is actually rising very, very slightly in VIX. Like the VIX, if anything, like it doesn't, I mean, look, you're looking at a marketplace that's up with VIX starting to come up. The bonds are getting all kinds of sketchy in here. It's right on the edge. Delete this trade out. Why did I go to VIX to create, okay, a downside opportunity? Why the VIX? Because skew matters. The VIX counters the skew. All right. And we're going to be building a VIX trade here momentarily. The VIX counters skew. And you go, wait, what? The simplicity of the trade, okay, I think you guys will love. All I'm going to do is I'm going to go 63 days out. Okay. And we're going to look at this in the Analyze tab because I want you guys to get comfortable with it, right? We're going to go 63 days out, and which is September expiration, which has just a couple days less than the SPY trade. And by the way, I was already looking at this earlier in absolute shock and awe. Check this out. Okay. Because you ain't seen anything yet. We're going to go out and we're going to buy options somewhere over here. Okay. Somewhere over here, we're going to be a buyer. What is this? Okay. That's the implied volatility. So we're going to be buying. Let's get crazy. Let's say we're buying 110% implied volatility. Look further out of the money. Look at it. The 33, that's 146% implied volatility. Do you have any idea that what you're buying with one hand, you're going to be buying 110 vol. With the other one, okay, you're going to sell like 150 vol. There's so much distortion in the curve, okay? This trade is going to be rock bottom in terms of price. Like I was playing around with this just before we started here, and I kept going like, okay, I'm going to buy the 16s and then I'm going to sell the 30s. I'm like, okay, so that's $1.07 debit. And then I go, what happens if I didn't buy the 30s? What happens if I bought the 16s and then sold, okay, the 40s in here, $1.24. Do you have any idea how big this spread is? There's stuff. Sorry, I'm losing my voice today. There is stuff so far out of the money with 156% implied volatility that in this case, I can't even get it on one screen because so far out of the money. In one case, we are buying 110 vol and we're selling, okay, 156 vol. Look, you don't have to know anything about skew. When you're buying something for 110 and you're selling something against it that's at 156, okay, think about how advantageous that might be, even if you're not like really all that comprehensive around skew. The trade, okay, is incredibly, incredibly beneficial at that point. And there's no other product that has this kind of skew, because when I show this to you, and I'm going to come over here, you know what, screw it, let's take this trade and let's analyze it. Okay, we're going to analyze the trade. We'll go to expiration +1. Okay, what you're looking at right now is a risk graph, specifically, okay, in VIX. All right, specifically in VIX, you're looking at a risk graph. Right now, okay, whereas VIX, you know, everybody's like, oh, VIX is right in this neighborhood here. For this trade to work to any degree, you start to get above what level? Above 16. And you go, no, it's 16 plus $1. Except in the other trade I just did a minute ago, I collected $1. So don't worry about that. Anything, okay, north of 16, okay? So you got a trade that you go greater than, pretty much or equal to 16, you're actually going to have degrees of profitability all the way up until 40, okay? If the VIX goes up, that's usually indicative of the market going where? Anybody? Anybody? What is it? Anybody? Okay. Market's going down huge. Absolutely. Okay. And I'm making sure that everybody's on the same page over here because that's important to me. When the S&Ps go flying down, the VIX will go kaboom. And right now, right, the VIX is like an absolute powder keg because, well, it hasn't done anything for a substantial period of time. The last time it even smelled risk, it got basically up above 21. You realize that this one little trade, we get up to that 21 region, okay, you're profitable. And again, to the tune of about $400 or $500 just getting to the 21 region like that. That's with one contract in here. That is one unit of this particular trade. The simplicity of it, okay, of the trade, it is a simple trade. But right now, it's all about the skew in here. As I said to you guys, if you want to do trades like this, look, all I'm doing is I'm in the SEP 18 expiration, okay? 63 days out, I'm just buying the 1640 spread. That's it. I'm buying the 16 calls. I'm selling the 40 calls against it. And some people go, you shouldn't even bother selling calls. Yes, you should. You should bother buying those calls because, you know, you're paying $1.53 for these 16s and you're still collecting, okay? Almost 27 cents for selling the 40s against it. That is giving you, okay, just enough premium brought in, okay, to make this thing worthwhile. And you know how much upside potential you have in here? If the VIX erupts, you know, this is, and again, I just like to show this is one unit. One unit of the trade has $2,276 possible profitability. This is a trade where if you just wanted to take a shot, and anybody could do that, if you just wanted to take a shot, you could risk $124, okay, to make, and again, doesn't mean it's going to go there, but it could make over, okay, 2,000. That's kind of the odds. You go, that's going to be low probability. Maybe. But right now with high skew, you're not afforded that opportunity very often. And that's one of the most critical aspects of this. So as I dig deeper into it, okay, now we're going to start to actually turn on and let's get a little crazy with this. Now we've actually put them together, all right? And what you're actually looking at is the pendulum trade, okay? What the pendulum trade is designed to do is to actually provide you, okay, really opportunity on both sides of this, okay? Because if you think of like a pendulum literally kind of swinging back and forth in here, this is exactly what this trade is designed to do. Now, this isn't looking at VIX, okay? It has explosive upside potential. It has really explosive downside potential. All I wanted to show you, and again, I can show you in terms of SPY as well, if this makes a little bit more sense. If, okay, if the spiders rally, you can be wildly profitable. Very, very minimal risk. To put a price tag on risk over here, let's say, okay, in the most horrific situation that you held this within 20 days of expiration, okay, you could lose as much as between 3 to 400, right? But that is only if we sat right at the 570 level. If we take off to the upside, you're going to be wildly profitable. We take off to the downside, okay, the VIX trade will kick into high gear. And again, high gear is like, you're like, oh, it doesn't look like much in here. Okay. It's very difficult to actually put this on one risk graph the way that I've actually done in here. That's why I was actually showing you guys in the slide deck, okay, what this really looks like in the slide deck, okay, is literally, I mean, this is the risk graph for this, okay, where it's actually got, all right, attributes literally on both sides of the pendulum here, okay? And that's, again, a really wildly opportunistic trade. So one of them is actually done, and by the way, this will fluctuate a little bit. One of them is done for about $1 credit, okay? The other trade in here is actually done for $1.24 debit. Is it perfect? You're like, no, okay? It's not absolutely perfect. But I'm going to tell you right now, it's a live market. So upfront cost is going to cost me about $20 upfront to do this trade. And I can actually go out and I can route these orders, confirm and send. Okay, build, confirm and send. Oh, this one I actually should unlock. I apologize. I want to get a clean market on this. Confirm and send it. Okay. Ooh, I didn't fill in the VIX side of the trade yet. So I'm working on the VIX trade. Come in here, cancel, replace. I'm going to hit this one right at $1.25 debit. So look, I'm in a live market. I want to make sure everybody's comfortable and understands exactly, okay, as I start to execute these trades. Working. Here we go, filled. Hey, rejected. Crap is that? Oh no, they're both filled. All right, so we're filled. Now we're going to take a look in the okay. This is actually now a live trade in the account. So obviously this is the VIX trade, okay? And over here is that spider trade. So I've actually got both of them now as active trades. So what I'm going to do is I'll further and kind of work these. By the way, you don't have to put on a lot of this to have effective, tradability. If the marketplace sells off just a little bit, you'll end up actually keeping the credit for the back spread. The VIX trade may not do very much at all, okay? If we explode to the upside, obviously you've got great upside potential. If we take off to the downside, okay, it'll be just perfect. That, again, you have a 1640 VIX spread on. For those of you that missed it, last week, there was a massive buyer here in the September expiration. Look at this under volume and open interest. There was a massive buyer in the September expiration last week that was doing hundreds of thousands of contracts out here, part of the position. The 186,000, there's 156,000. Here they are. They actually were doing the 25, okay, 45 spread. You can see it. There's the 25, 45 spread. We just did, okay, the 1640 spread. We're doing a much more retail friendly version of this particular trade. So we can absolutely, by the way, we can share the trade. I just wanted to get some executions up and going for you here. This is the kind of stuff that we're doing now in the inner circle on a week-to-week basis. So this pendulum trade, again, a very two-prong approach. Upside potential in the spiders, downside potential expressly inside of the VIX. Okay. This is actually a theme that I've used for years in times of like what I would consider change, uncertainty, but it's the condition right now of both volatility and skew that actually, as I said, kind of make this one nice little meatball to go after. And this is not a trade that you're going to have to worry about substantially. This is a trade like, look, if there's going to be degrees of profitability over weeks or whatever, you're going to know it. You're going to know it. By the way, I have a million trades in here, a couple of different accounts. So these kind of trades, when they start working, you're not going to have to worry about monitoring a lot of them. Okay. And that's again, it's the kind of thing specifically I'm going to be talking about. The inner circle. It starts, that's this Thursday. Not everybody necessarily can make it. It's Thursday. Okay. I actually do the sessions at 8 a.m. Pacific time. It's going to have 24 highly detailed weeks, in-depth discussion. Today, obviously, I just packed some education into like less than about 45 minutes over here. Each one of the inner circle sessions is going to run a period of 90 minutes with a full Q&A. Okay. In inner circle now, there are 3 live trades done a month. So that's going to accompany inner circle. Okay. And that doesn't mean I'm necessarily going to trade right in inner circle. In this particular, like this was actually one of the better days I've seen to be able to execute into it. So why not? We're going to be doing Christmas trees, inverted catapults, earnings trades, obviously the pendulum, which I just placed, different types of funky ratio spreads, trade ideas for the likes of even people at Theo Trade have never really known before. This is, as I was saying, okay, this is the last time though we're going to do the full blown 24 weeks of it. For anybody that's been through inner circle, you haven't been through this one, the 24 weeks is going to change. Okay. I'm reducing some of the theory, some of the delta gamma theta vega talk, and adding more strategy, just like I did in the session today. I mean, today I just like, I want to do this pendulum trade because I'm looking at the marketplace right now. And, I'm going to tell you, trying to handicap this on a day-to-day basis. Okay. This is some futility in here, it's whatever. Like, the market's not even moving, except it has, and dramatically. And the market's moving really big right now in like a 13 volatility. Can you imagine when it really starts to move and that volatility starts to take off to the upside? It's going to get intense. But strap in. So we're going to do in-out spreads, a couple tweaks for that, different earnings trades, pendulum trades, and Christmas trees and catapults. And the catapults are going to be beyond some of your wildest imagination. So there's a lot of improvements I'm going to put into this next 24 weeks of the inner circle. As I said, it literally kicks off this Thursday. The other thing that we're doing with the inner circle here, the inner circle has always been assisted by Todd Sweet, Brandon Chapman, Blake Young. As I said, 3 trades a month. We're actually going to start to keep a portfolio, okay, of this with email notifications when I do trades. All right. It's theotrade.com/I. I is in igloo, C is in Charlie. It's $3,000. That also happens to include the Scottsdale live event. You don't have to go live. Okay. The event is archived, but $3,000 just for inner circle. Okay. Is more than worth your time. There's nothing else. You can go out there and you can pay, I don't know, $24,000. I always mention 24 grand. Years ago when I was at Thinkorswim, TD Ameritrade, it was actually Brandon Chapman taught a class. It was an 18-month, they used to call it a PhD. It was 18 months, okay? And it cost $24,000 for this 18-month, like deep immersion into the markets. You'll get way more here, okay? 24-week mastermind, 90-minute sessions, because here we're going to provide like one-to-one support. One of the most critical things about inner circle, you literally get one-to-one support. There's a reason it's not just me. By the way, I am the only one that actually does the education on here. Todd Sweet, Brandon Chapman, Blake Young, predominantly there to help kind of guide, answer some questions. I'm not big into technical analysis. Brandon and Blake are. Okay. Todd Sweet's a former market maker. Okay. Spent over 20 years in the floor of the Chicago Board Options Exchange. He actually helps us with a lot of the trading here at Theo Trade. We're adding 3 trades a month. And again, as I said, 3 trades a month. There'll be email notification on those inside of that 24 weeks. It's a lot. Okay. It's a lot. It's all completely archived. And as I said to you, it has priority status email. So you got a question, anything, if we can help you with a trade, okay, that alone is worth the $3,000. The $3,000 will also include, okay, a live Scottsdale event. All right. We do this because, well, first of all, we want people, okay, we want people to come out and see us live. No question about it. We want people that want to come out, see us live. Sorry, I'm just answering a couple of questions here as I'm going along. You know, and I'll verbally kind of respond to you guys too. We want people that want to be here for the event. I'm actually going to be obviously at the Scottsdale event. I'll go through all the different instructors over there. But if you cannot make it live, okay, to that event, the event itself is archived, meaning that not only is the inner circle archived, but the live event is archived, and that's important. So just throw this up here. By the way, if you need to, if you want to ask some questions about it, 623, okay, 244-5657. So as you guys scroll down, I'm going to go through all the details here in just a moment. If you scroll to the bottom of the page over here, okay, obviously a single payment of $3,000 or 3 payments of $1,000, but something we've never done with any inner circle before, there's a money back guarantee on it, which I'll discuss in more detail in just a moment. All right, now the live event. Let me talk about the live event. So inner circle, hopefully I gave you guys a pretty good feel for what that looks like today. I mean, I really do. I wanted to give you a really kind of just a strong feel of what inner circle looks like. Oh, cool. Somebody just said, it's too hot in Scottsdale. By September, it's cool, okay? It's cool at that point. What do you think? I'm up in the mountains right now. You know something funny? We looked everywhere to host an event. We did it in Florida last year, and we looked everywhere. Like Vegas was booked out for like a year and a half. I mean, even like a kind of hotel in Vegas that you don't want to go to, like Circus still there. We didn't call them, I swear. But we looked everywhere. Then we started looking here in Scottsdale, like, oh, let's do it in November in Scottsdale. Okay, November in Scottsdale, forget it. Okay, everything was booked for weddings for like 4 years in advance in Scottsdale. They're like, the only thing you're going to get is September. And we're like, we'll take it. Like, as it was that bad when we looked, we'll take it. But the other reason it's in September. So I like to be in the Virgin Islands most of the year. But September, that's peak hurricane. Like those dates are literally peak hurricane. I'm like, I'm going to be off the island in Arizona anyway. Let's do it. So it's not safe to be down there like September. Anyway, September 12th through the 14th. And you don't have to worry about being hot. Okay. You will be trapped in a room with us and we will keep you, okay, more than freezing the entire time. There's no reason to go outside. You're inside the hotel the entire time. If you want to play golf, that's on you. May I suggest teeing off at about 6:30 in the morning? It's a decent time. Anyway, get out from behind the computer, meet all of us. Okay. I'm so adamant. Like I want to see people live. And it's one of the reasons, like, we're just inner circle, it's $3,000. We're giving people a ticket. We want to pack the live event. And I think you guys will really appreciate. We have Tom Sosnoff is coming back to this event. And Tom does not do events really outside of what we do here at Theo Trade. He does his own events and so forth. But Tom's also, he's getting up there. I don't know how many more years in a row I'm going to be able to get Sosnoff to come out to events. So Tom and I was his work wife before Tony Batista, all the way back until like 2000 2001 time frame. Another guest we're going to have is Paul from the CME Group. So the CME Group, Chicago Mercantile Exchange, is one of our sponsors. talk about, so I love to mention this, okay? There's no other education firms that get the backing, okay, of exchanges. I just want you to bring that to your attention. A lot of education firms out there, okay, there's a lot of crap out there. You find another education firm, okay, that is not like $1 billion brokerage firm that is getting the Chicago Mercantile Exchange not only come out to actually bring one of their heaviest hitters out there. I go back, okay, CME for years, and they will of course be at our event. So we draw some serious talent to these. And by the way, I had a list of people, okay, from the industry asking to speak at the event. We're like, oh, CME group, perfect. Okay, Sosnoff from Tasty, why not? I mean, Tom, okay, believes in all the same strategies, ideas, logic that we're into. So break bread, meet some of the crew over there. Obviously, Tony Rago, this is our group. Blake Young, Corey Rosenblum, Jeff Bierman, Gianni DePoce, Brandon Chapman, and of course myself. Blake is going to be doing the triple threat trading system. And the money flow squeeze strategy. These are his two particular topics, of course, at the live event. Now, that live event, as I said, in September, if somebody's like, it's too damn hot, stream it from your house. I prefer you come out. But it's funny because when we stream it, we're like using a version of Zoom. Okay. We can even see you. If you want to sit in your underwear and, broadcast over Zoom, so be it. Okay. Do it. Tony Rago, life-changing power, one simple setup and day done. That's like one of his favorite phrases, day done. Okay, the road to daily profits. Tony is our resident intraday NASDAQ futures trader. Okay, some people may not know Tony. You don't know Blake. Blake worked with us, by the way, at TD Ameritrade and Thinkorswim days. So I go back almost like 20 years with Blake. Tony, okay, I actually knew of Tony before Tony even knew anything about us. And he's actually one of the first people we hired here at TheoTrade. Jeff Bierman. So Jeff Bierman and I worked together, obviously, very early days of Thinkorswim. Jeff Bierman actually built a lot of the Thinkorswim charts. So when I left TD Ameritrade, people were shocked because Jeff and I used to get into it constantly. I mean, this is what happens when you put, two wild animals in a room together for substantial periods of time. Jeff and I used to get into it daily. Like he was one of the very first hires. People are like shocked. They're like, I can't believe you hired Jeff Bierman. I thought you guys hated each other. Hate him. Okay. Guy's like my brother. Okay. I want to kill him, but he's still like my brother. Wall Street's secret weapon. Okay. The Genesis cog. So if you haven't seen anything about the Genesis cog, it's a huge amount. Okay. About artificial intelligence, algorithmic trading. You guys will love that. Then he has the parachute trading system. I'm going to leave the parachute trading system for him. And then Jeff Bierman and I, it's not Don and Jeff, it's Don versus Jeff, the odd trading couple. Option Mega Geek versus Professor Chart Tweak. We're going to go at it live. That one, that'll be broadcast, but again, I think you want to attend that one live. Corey Rosenblum, significant profits in sideways markets. By the way, Corey, I met at trade shows when I was 25 years old. They put me on the road speaking at trade shows. Thinkorswim did. They put me on the road speaking at trade shows. I met another guy that was about the same age as me, and I'm like, holy crap. I'm like, you can't be more than 24 or 25. He is. He's a young guy. We're not so young anymore. So this is when we were both 24 or 25. We met each other. Okay. Fun, interesting story about Corey Rosenblum and I, too. I was in a green room. For those of you that don't know what a green room is, okay, behind stage at a money show. And we were down in Florida. There were 5,000 people packed into a room. Okay. You may not like it, but at the same time, whatever. In the green room on one side of me was Rudy Giuliani. Okay. On the other side was Steve Forbes. He's 25 years old. Okay. Corey was actually in the green room too. And Corey was like, almost like blushing. He wasn't actually speaking. He just wanted to go back and actually see Steve Forbes and or Rudy Giuliani. By the way, this is Rudy Giuliani back right after September 11th time, not current Rudy Giuliani. So give me a break on that one. I was scared to death on that one. If Corey wasn't back there, like, blushing and like drooling over Rudy Giuliani and so forth, I would have completely lost my mind on that one. I've never actually told that story before. Anyway, significant profits inside win markets and the one pattern for spotting a trend. He is also predominantly intraday trend trader, swing trader. You guys will really appreciate Corey. Gianni DePoce is one of our newest instructors here. Become a momentum master in minutes and hidden wealth secrets. So Gianni is actually cyclical analysis, excuse me, Fibonacci's and so forth. So cycle analysis is Gianni's area of expertise. That's exactly what he's going to be covering at the live event. Brandon Chapman, surviving the death of the dollar. Brandon is by far and away, and bear with me here for a sorry, as I'm choking over here. Brandon is by far and away, okay, the best we have in terms of macroeconomics. So that's exactly what we have him focused on. Everybody is focusing explicitly on their strengths during this live event. Death of the dollar and big money magnets. Of course, myself, I'm actually going to be talking something I haven't even done in Inner Circle, building trading concepts and future trading concepts. How do you come up with something like Pendulum? what really makes a difference in testing systems? For instance, you come up with this amazing trading idea. I don't even care if it's a MACD, a Fibonacci, a Bollinger Band. How do you test your charting system? Don't give me this back testing crap. We're going to really talk about that. So it's building future trading concepts. The second one is going to be all skewed up. It's actually going to be a trader's guide to Christmas tree spreads. It's going to be the most in-depth Christmas tree spread discussion I've done, and obviously then I'm doing the session with Jeff Bierman. So these live events always sell out. Going to it live always, okay, will sell out. And the X factor this year, our list, okay, for marketing is 3 times larger than it was in previous years. This is the early bird opportunity. So if you signed up just for the event, it's $2,000, right? We're basically giving it to you today with Inner Circle. So it is strictly limited to 200 people. That is all that this room will actually hold. The Inner Circle plus the Scottsdale live event. I say live event or streaming. Okay, it's a package deal. It's $3,000, includes Inner Circle, the live event. That's actually one of the last live events we did in Scottsdale. Okay, it's going to be pretty wild. Now is the time to learn these strategies. Look, again, theotrade.com/I as an igloo. Okay, C as in cat. It's $3,000. It includes both of them. I also wanted to throw this out here. We've never done this for Inner Circle. As I said, okay, this is the last Inner Circle that I will do, okay, for 24 weeks. And it's just like, look, it comes down to it's eating up too much time. It is the last one I'm going to do. And I'm letting everybody at TheoTrade and outside of TheoTrade know this is it. I don't have 24 weeks, 90 minutes a week, 3 hours of email a day. I don't have time anymore. We're going to do a 30-day money back guarantee on it. Everybody can come to the Inner Circle, check it out. If it's not for you in the first 30 days, okay, it's money back guarantee. By the way, it's 30-day money back guarantee. You can't come to the Scottsdale event and eat our food, okay, and then be like, give my money back, okay? That would not be fair for anybody. Anyway, I want to make sure that everybody's comfortable with that. So I'm going to pull up the site in here. Make sure we're good. Again, there's a money back guarantee in there. As you scroll down to the bottom, okay, make sure that when you're putting in the billing information, put in a very viable email address. That's an email address, okay, that we're not only going to communicate to you about the live event, we're also going to be sending you trade ideas. So look, I use that like, the Apple that hides your email address all the time in here. Use a viable email address. It's super important. Okay, super important over here, and I'm making sure we're good. I'm actually reading some of the questions on here. Okay, getting all the questions. By the way, for those of you in TheoTrade, I'm more than happy to provide you some of the trades, some of the trade details. Obviously, we're going to talk a lot more about the pendulum trade during the Inner Circles over there. Okay. Oh, somebody was asking again the date for the live event. Okay, I'll scroll back up in here for just one moment. The dates for the live event. Well, I know it off the top of my head as I'm scrolling through here. The inner circle starts July 18th. That one's easy. The Scottsdale event is September 12th, okay, through the 14th. And we're super careful because we know that there's all kinds of stuff and holidays and kids starting school and so forth in September. We're super careful not to have this overlap any of that. So it's right there, September 12th through the 14th, just to show you guys like what the itinerary kind of is outside of this. But the itinerary, it's completely packed. Where's the itinerary on here? I scrolled through it. Okay. The itinerary, I'll just let you know. On September, okay, 12th, you can fly in that day. On the 12th, we start registration at about 3 or 4 p.m. Okay. At that live event. On the 12th, what we kick off with is just a nice cocktail party. Okay. Hors d'oeuvres. And then Jeff Bierman and I actually will speak a little bit at that particular evening kind of event. Right. So that's the first day because September 12th, a lot of people fly in. By the way, I don't mind saying this. I live within a mile of this resort. I'll be there probably a lot on the 11th and the 12th. Okay, we got to set up a little bit, do a little dance, make a little love. It's 100, hopefully it's 105 degrees out. Okay? I like when somebody said it's 110 degrees. I'm like, you're sitting in a conference room. Which now that you say it, now I'm going to make that conference room 65 degrees. You better bring a sweatshirt. You're going to freeze. Okay. And whoever said that, that's exactly why I'm doing it. Okay. It's you. It's not me. It's you. So the live event kicks off on that 12th with the cocktail party, which by the way is one of my favorite things. If you do smoke cigars, okay, it's okay. We have a special safe place for people like us. Okay. In the back of the hotel, there is actually a golf course, right? This is what do they call that? The ninth hole at whatever, right before the sprinklers go on. No, we're taking you to the 19th hole. No, that's Vegas where they dig in the dirt and then bury you. Anyway, there's a secret squirrel place for cigars out there. On the 13th is a completely full day of education. We'll have Tom Sosnoff speaking on the 13th. We'll have Tom Sosnoff speaking on the 14th as well. Tom doesn't just show up and meet and greet. Tom's going to do like 80, 90-minute session, okay, on both days. Because I told him for this session, come out swinging. Because people loved what we did in the last session in Florida. You got to realize I traveled with Tom for 10 years. I mean, we went everywhere. I was like joined at the hip with Tom for like 10 years. And I know everything about him, like literally everything. Wife, kids. I mean, kind of grew up for like 10 years together. I can't tell you how many times, I'd stay in Chicago. He's like, I'll stay in a hotel. Come here. Anyway, so he wanted me to interview him in the Florida event. And I'm like, I don't know if you really want me to do this. I go, because if I interview you, I know everything about you. I got to ask you questions that are really off the beaten path. All I wanted out of that 90-minute interview was to get crap out of Tom, okay, that no one had ever heard before, nor had I heard before. And it worked. it was a good time. Okay. That was a good time at that particular event. So this time I haven't even begun to think about it, but I'm really going to beat him up on that one. Okay. So awesome. Oh, somebody was saying about the back spread in here. Yeah, you know what? I can copy and paste some of those trades in there for you. Okay. Let me switch accounts over here. I'm a wrong account constantly. I'm actually posting these into the Theo trade room. Got one trade. Make sure I get the other side of it on. Apologize. I'm actually posting some of the trades into our room. Cool. I can post these in here as well. There we go. There's one and two. These trades, for those of you that are not members of Theo Trade, these trades are not a recommendation. You're on your own. You clicked your own confirm and send. and tip your waiter or waitress. No, in all seriousness, on the back spread side of it, on the back spread side of it, the call ratio back spread, that's the one that takes some risk. On the call ratio back spread, it's also, if you're like, oh, it eats too much margin or it does this, you could actually use other products like micros, which would be half the size, to cut the margin. I mean, it would be like a few $100 in margin, like $600-700 in margin. You could do it in the micros. That would actually be reasonable as well. So I posted both the trades in there. All right. Somebody said all the event dates. Okay, cool. I'm looking back. Somebody had another one. Oh, trader DTP said back spread. What's the sweet spot days to expiration? I would bail back spread. Okay. If it's not working well, bail it anywhere from about 20 to 25 days prior to expiration. Okay. The absolute dead cut point would be 18 days prior to expiration. Pull the ripcord, bail out of that trade. Okay. That would be very, very reasonable. If the trade is profitable, the cool thing about the back spread, when they're wildly profitable, I'll cruise back over to the analytics. If it's wildly profitable, once it's deep in profitability, okay, you can let it run until almost expiration. So part of this trade, I'm going to be honest with you guys and say you really want to see all the little caveats that we're going to cover in Inner Circle. Like the caveats we cover in Inner Circle, okay, building the trade is pretty straightforward. Copying anybody's trade is really straightforward. You hit confirm and send, getting out of it. So if it's not working, I'm getting out of it from like 18 to about 25 days, okay, prior to expiration, right? I know you can't read that. But if the trade is working, I mean, I can hold this thing. It's like feet to the fire at that point. You can hold this thing right up to expiration because there's no perceivable risk anywhere up here. Once you cross through the Andy Dufresne portion of the trade, the Valley of Death, okay, you're in the clear. You're beautiful. Let fly at that point. I hope that helps to some degree. Okay. And the deltas of the back spread, yeah, I can cover that. And also deltas of the back spread, that's like one of the caveats. Like, what are the deltas of the back spread? I don't know. What expiration cycle are you using? And you go, what? Don't you do that. It totally matters. Why does the expiration cycle matter? You know that September is a primary expiration cycle, and September is also going to carry dividend risk. I went to September for a specific reason. I know exactly where the div risk is. It's on the short call. Okay, that trade has to be exited before expiration, but it actually impacts the overall delta of the trade. Totally impacts the delta of the trade. It's one of the reasons, again. So find out on the next edition of Inner Circle over here. Cool. I'm just making sure we're good. Can you bring your fiddle to the live event? You show up? Hell yeah. Do you think I was going to say no to that one? Hell yeah. Not only can you bring it, I encourage it. I want to see that crap. Okay. I'm all about that. Okay. Strange individuals, you're welcome. Okay. In fact, even encouraged to come. I like it. I like it. Okay. Okay. D is complaining about thinkorswim commissions. That's why you got to go, D. All right. No, on all seriousness, there's a reason that I have Tom Sosnoff coming out from Tasty and not somebody from Schwab. First of all, there is nobody at Schwab. There's nobody. People that had the big talent that worked at Thinkorswim and TD Ameritrade, the individuals that ran Thinkorswim, everyone is gone. There's not one individual that is left behind. One of my buddies runs Robinhood. Okay. He is the guy that runs day-to-day ops of all of Robinhood. Another one of my friends, she runs E-Trade. Okay. Another one, he's the CEO of Tasty Trade. I'm not talking about Tom Sosnoff. I'm talking about JJ Kinahan. Everybody left. Okay. There's no one that's the adult in the room that kind of understands this stuff. So look, Tasty Trade doesn't have the analytics. We all agree, but it is what it is, right? Okay. It is what it is over there. But I will say this. I still like their Analyze tab. Okay. Had a lot to do with that little monkey too. All right. With that, wanted to make sure, oh, the event info, we're good over there. Okay. Yeah, JJ actually is the CEO. A lot of people don't know that. JJ is the CEO of Not Think or Swimmer, Charles Schwab. He's the CEO of Tasty Trade. Okay. That's where JJ is. Yeah. I'm just answering a couple more questions in here. So the VIX trade, I posted that one in there. Okay. By the way, the Scottsdale resort at McCormick. Okay. It's absolutely spectacular now. It's a completely different place than it was. They completely redid the place. I just went there like 2 weeks ago to when I got back to the States, kind of go check it out. It's spectacular. It's 100 times better than it was, and the food was even good too. I was rather surprised at how nice it was. Okay. Yes, we'll make the meeting room a meat locker over there. Okay. All right. Circus. Okay. Yeah, it could have been here, could have been circus. You know, the funny thing is, even at circus, it would have been 120 degrees there. Anyway, with that, I want to thank everybody for tuning in today. And again, I want to reiterate, this is it. When I say this is it, this is the last inner circle that I am going to do, and I'm putting a money back guarantee on it. Check it out. Again, it's $3,000 for both of these. So it's theotrade.com/IC. Again, theotrade.com/IC. I'm excited about it for twofold. Number one, in this last 24-week session that I'm going to do, believe me, I'm going out with a bang. This one will be big. Okay. It'll be big. It'll be definitely the best sessions that I've done on Inner Circle because I'm not going to teach the 24 weeks anymore. I'm not saying I'm not going to do masterminds ever, but 24 weeks, it's intense. It's intense for me. It's in the archives for you. It's great. And this one, we're actually adding some live trading to it. So 3 trades at minimum a month. And for $3,000, we're also giving you, of course, the Scottsdale live event or streaming, whichever works for you. By the way, when you attend Inner Circle, we're in a Zoom forum, so we can talk basically like this. All right, appreciate everybody tuning in today. Again, theotrade.com/IC. Have a wonderful afternoon, everybody. Bye-bye.